Let's get to today's action. We head to the pits of the CME with Larry Shover. Is everybody talking about this Fed meeting, waiting to hear what Ben Bernanke and company say, not necessarily do?
You know, I think they are. They're thinking about that. They're also thinking about what will Carney do at the Bank of England? What will happen with Draghi? Will he pull another rabbit out of his hat like this time last year? We have PMIs and jobs. So there's a lot to talk about. People haven't packed up for the Jersey Shore yet, but they are getting ready to after this week.
Well, Larry, I have never in my lifetime, and I'm thinking back to Paul Volcker and before, I've never seen a Fed chairman who is more afraid of spooking the market than Ben Bernanke. It seems to be the utmost fear in his mind. He'll do anything he can to avoid that from happening. So don't you think nothing is going to happen tomorrow? He doesn't want to spook the market. He's not even going to have a press conference.
Yeah, he's been the most overly transparent Fed chairman we've ever had, at least in my history as well. And I don't think it's going to be very anticlimactic. I think traders are looking beyond this right now, to tell you the truth. I think more people are worried about who the next Fed chairman is going to be, not what the Fed's going to come out with tomorrow. So that said, the drama seems to be more about Summers or Yellen. Who's it going to be?
Okay, so let's then decide, because we won't know that for several months, as we know. But looking at, say, for example, what's on the screen, the Dow winners were the big names such as Intel, and then you see, here we go with the Dow laggards, Verizon, AT&T. Can you distill anything from the movements of the stocks that you saw in the pits today that tells you how stocks will move in general in the next couple of months?
Yeah, I think the way I see it, it's just that we're surrounded with all these vague generalities in the marketplace, whether it be global growth. I mean, it's kind of sort of okay. Valuations are far from cheap, but far from expensive. And will the Fed keep rates low for as long as possible? So with that said, people are realizing that different sectors in the market have undervalued. There's a financial repression system where people have to take risks somehow. So now they're picking up on the on more of the tech sector, which that's been, you know, the redheaded stepchild for so long. So that's what's going to happen if everything stays status quo over the next few months.
Okay, hold on a second, Larry. We're going to come back to you. But Dennis Neal has the earnings on Buffalo Wild Wings. Go ahead, Dennis.
Yeah, we've got a big beat by Buffalo Wild Wings, you know, stock symbol Be Wild, coming in earnings at 88 cents a share. Now, Wall Street looking for 79 cents, and that means earnings growth this quarter was 42% growth instead of the 27% growth Wall Street was hoping for. That's a great thing. On revenues, though, only a slight beat. Revenue coming in at $305 million.
Look at the stock going down after hours, Dennis. We're seeing a big drop in that stock. Perhaps it's revenues, perhaps it's something else.
Yes, well, right now, same-store sales up only 3.8%. Now, at the start of the quarter, they were running up 5.2%, and a year ago, same-store sales were rising 5.3%, and so that's a market slowdown of 3.8% for Buffalo Wild Wings, and that might be why stock's heading down. Got to keep looking through the notes and see if the company's put out some revised or downward outlook.
By the way, one of the things that investors were hoping for is that they'd get more growth on the bottom line because they're paying less for chicken. Chicken, the price per pound has gone down quite a bit, and yet that is apparently not helping after hours.
Actually, it has helped, though, with their earnings that ended up coming in at 88 cents a share instead of 79 cents. That probably is entirely because of that lower cost base. But the thing is, Wall Street wants to see really good revenue growth. Wall Street's now worrying for all of these companies, not just in restaurants, but across the economy. You guys have cut your costs. Your earnings are doing well, but we want to see top-line growth that is also a sign of a better economy.
Oh, top line, and then when you don't get the bottom line, you want the top line. Listen, I know, but this is the first beat for this company in 5 quarters, Larry Shover. Not getting any love or credit for that from Wall Street at the moment. As David mentioned, the bid, the ask around $95 when the close was $97.69.
Yeah, you're exactly right. I mean, it seems like Wall Street was had all this great expectations baked into the stock already. So this is a classic case of, buy the rumor and sell the fact. I mean, it's a great company. Sally Smith has done some great things with it. I mean, where else can you go in America where you walk in and it's like a party? You have half the room with kids and adults. The other half of the room is it's a sports bar. I mean, the food is, well, that's a different story, but people tend to really like their food, and they've created their own beer. I mean, it's a very, very unique atmosphere atmosphere, unparalleled. Is it a $100 stock? I'm not sure, but they baked in a lot of expectations going forward. She's built the company starting with like 35 restaurants. Now it's what, 940 in 49 states, including Canada. So how much more room for growth is there? We'll have to see. But she's created a great business model.
Larry, this earnings season, we've had a little improvement on the revenue side than the first quarter. It certainly didn't hurt stock valuations as they continue to rise no matter what. But are we in the third quarter, as we look forward, are we looking to a point where if investors don't see that revenue growth, they're not going to put their money in the stock?
Well, at some point that's going to be true, and picking that point is impossible. I wish I could do that. But at some point, if revenues and earnings per shares don't continue to go in lockstep with the price of the stock, there's going to come a point in time where momentum takes over. We don't know when that's going to be, but yes, eventually it's going to happen. We'll have to have a healthy correction. But that said, 14 times earnings per share going out to 2014, we still have a little bit of room for a negative shock in the market. So we still have some room to go if things continue to go status quo.
Let's give a nod to our commodities viewers right now, because you're right there in the seat of what's going on in commodity land. I know that floor, and I know that the soy guys are around the corner, but let's talk about most of the precious metals and base metals moving lower today.
Yeah, they were. Well, gold's had a really good short-term run, a little bit of profit taking. I mean, India came out this morning making it a little bit more restrictive for them to buy gold, so that's a negative tone. I mean, really, this run-up we saw, especially in gold, was really due to the fact that China just lowered their floor or eliminated their floor and interest rates, making it a lot easier for import of gold. When it comes to base metals, especially aluminum and copper, I mean, really, it's more about the emerging markets right now, where the output gap continues to shrink. We're not seeing the fundamentals to support a long-term bull market in any of the industrial metals.
We got to run, but I can't talk about commodities without talking about oil. That was a big move today to the downside. Is it going to continue?
I wish it would, but my feeling is I still like Brent over, I like World Texas over Brent. I do think we'll continue to move down. It seems like Japan's not going to import the oil that most of the world thought they were going to, and that goes along with the emerging markets inside of Asia. We're seeing less and less demand for it right now, so I would see that we're going to see a little bit of a reprieve in the oil price.
Larry, thanks. And we'll see Larry in a few minutes when the S&P futures close. But remember, as everything's settled, the Dow ended down just slightly. So we'll be watching all of this and more. Thanks, Larry.
Thank you, Larry. See you in a couple of minutes. Well, the president...
Yeah, the S&P 500 has meandered between 1680 and 1700 for a week and a half. And look at the U.S. dollar, 6 weeks on a tear, only to get back 50% of its gains in 3 weeks. So right now, it's clear that we're in a period of transition. We're decoupling, we're rebalancing. We have a lot of news coming out with the Fed, Bank of England, ECB, PMIs, jobs reports. We have a lot of things, and I do believe the market's being very casual, maybe even a little bit naive about what could happen. I'm not calling for a crash. I'm just saying we have a lot of information swirling about, and we just don't know what's going to happen by the end of the week.
But as you mentioned, PE for the S&P going forward is still not overvalued, so people say there could be room for growth. All right, Larry, thank you.